This is Real Estate This Week with Stephen Gasque, continuing 16 years on air and online, helping you succeed in buying, selling, and investing in property. The best real estate strategies out there just for you.
Welcome to Real Estate This Week. Hi again, I'm Stephen Gasque, and I'm so glad you're here as we look at something you might be dreaming about: how to invest in property. Can those dreams really come true? Dreams of extra income and properties that get more valuable over time, growing your wealth and security. Yes, those dreams can come true for you. Let's find out how by talking to an investing expert. Joining us now is Peter West, Realtor with Bishop West Real Estate in Massachusetts, Vermont, New York, and Florida. Peter has been investing and helping his clients invest for more than 30 years. Peter, welcome to Real Estate This Week.
Thanks, Steve. I'm glad to be here.
I am so glad you're with us. And so, Peter, first of all, how's business in all the markets you serve?
The one-word answer is interesting, because in the markets that I particularly serve, we're experiencing different effects. In Florida, on the residential side, it's clearly a buyer's market. In Western Mass and the Berkshires, Southern Vermont, and Eastern New York, we're starting to see a bit of a shift in the market, but predominantly it's still a seller's market. So, like I explain to everybody, everything is hyper local. I mean, certain things that you would think that would go instantly, multiple buyers in a seller's market are not. That's where I say it's starting to shift. But in the Florida market, in the past few weeks, I'm seeing an uptick of buyers, which is good. Maybe it's because it's a buyer's market and it's, way more affordable than it was through the COVID era. But I think interesting is the one word answer, because there's really no way to describe it, and it's not the hustle and bustle of the COVID era, if you will.
Interesting. And so, Peter, let me ask you this. If I want to begin investing in property and get the extra income and have the advantage of accelerating property values in my favor, what should I be doing right now if I'd like to make that happen this summer?
Well, the first thing would be, the selfish answer would be to call me. But besides that, we need to look at a marketplace. And first off, I take it back and peel the onion one more layer. And what are your goals? Perhaps to make a quick return, a house flipping opportunity might be what you're looking for, because that gets you something on a quicker basis. Sometimes investing in a single family duplex, four family, small income property, that's slow and steady. Certain ones you will still have cash flow, particularly if you don't leverage all the way up. Leverage by meaning taking out financing. If you have cash to put down, you're going to get a higher rate of return than you are in the bank. You're going to start to see that. But truthfully, if you just buy a single family or a duplex, you're not going to see significant cash flow right off the bat. You're going to see it slowly. Slow and steady wins the race in that game.
Now, Peter, I'd like to set the stage for everyone listening to this. Can you tell us right now how many rental properties you own?
It's funny, you'd think that you would know. And, my father, who's now passed away, but he used to always say, "Well, how don't you know?" When you have a team, you don't know, typically, because I don't handle the day to day. I think now we're probably at maybe 25 or so. But what we've done is we've consolidated, we've sold off some assets, and we've taken that money and we've redeployed it into other real estate syndications where we're not dealing with the day-to-day work. So there's, right now, we're down in numbers for the last time you and I had done a show together. I've gotten rid of some, repositioned in different ways. Um, but there's so many different vehicles for investment. Again, it comes down to what each and every person's individual goal is in what they're looking to do.
Now, Peter, I know that you fly at a very high altitude when it comes to investing. But what I'd like to ask you now is let's bring it right down to the kitchen table. Let me ask you about the couple that would like to buy a rental property right in their neighborhood, a single family home. How do they find it? And Peter, how do they pay for it?
That's a great question. Finding it, you need to have the right real estate professional that understands. Somebody that you got off the web, or somebody that's a friend of a friend. I would personally ask them right off the bat how many rentals they own and what's their experience in the rental market. I mean, clearly, right off the bat, somebody that knows what you're looking to do, that understands, that has been involved in rental property. And then they're going to be able to figure out, and you're going to be able to figure out, okay, that 2 bedroom, 2 bath ranch, how much does that rent for? You got to know what you can get. And then you kind of work your way backwards. Okay, so if that's rented at X amount of dollars a month, what are the expenses going to be? Now, keeping in mind your insurance for a rental property is going to be a little bit different than your rental on your primary residence, just because there's more risk on the insurance agent's part. So, finding out how much you can rent a property for, how you're going to finance it, how much money do you have to put down? You should still be going and talking to the lender to see what you can do. That's paramount. That's paramount. Because how do you figure out the terms that are going to be available to you without knowing that? You can plug them in, but I'm not one that works on speculation. I'm one that works on reality. So if that lender says, yeah, we can do something like that, it's going to require 10% or 20% down to the purchase price, we can do that. And we can do it based on this. Or sometimes, if you have enough equity in your primary residence, one of the better ways to get started, and there's tax benefits on both sides of the coin on that one, is that maybe you take an equity line of credit out to use that as the down payment on your investment property.
Ah. And so once you get qualified for that mortgage and the seller accepts your offer and now you own it, Peter, how do you get a tenant, a good tenant, quickly?
Well, to me, those two things don't happen. Quickly and a good tenant don't necessarily happen. And when I've seen people fail or stumble, it's because they went into the tenant selection process too quickly. And depending on what state you're in, getting a tenant in is always easier than getting them out. Um, Certain states, Massachusetts, New York, for example, clearly are on the side of the tenant. So if you have the ability to go into different states, maybe that's not where you want to be. However, we've been very successful in those states. And what I tell everybody is you need to know the laws, the rules, and the regulations like the back of your hand. When you get into buying, whether it's one investment or several investments, or you do it full time, you need to know the rules. You need to run it like a business. You need to have a separate account for those properties. You don't mix and mingle with your personal household account. You set it up and you run it like a business. Number one, you have to have the mindset that it's a business. Number two, when tenants say that they're looking for a place, I would say, well, that's good because I'm looking for the right tenant.
What do you see on a tenant's application that makes you lean towards that tenant? What sort of qualifications would represent a really good bet if I am a first-time investor?
Longevity in their job, um, or a good reason why they're leaving their other place, that they've been in their other place for a long time. I got tenants in the Berkshires in Western Mass. I got one tenant, I think she's been with us 15 years. Got another one in that building, came with the building, and we've owned that building for
Ooh,
16 or 17 years. So longevity. They're
wow.
not job hopping, that they have a strong reference from their employer. Um, that the story the story matches up to what they're looking to do. I think that's your basic questioning.
A lot of tenant software these days will allow you, with the applicant's permission, to pull their credit.
Mhm.
How important is that?
We don't pull credit. So to me, it's not as important as the whole story and the whole picture. I'm not saying no. That gal that has been with us for 15 years, she came to us with a foreclosure on her primary residence. If I had just gone off of credit, I probably wouldn't have taken her. And again, she's a long-term tenant, 15 plus years. What does that mean for me? No turnover, no loss of rent, um, just out of sight, out of mind. You know, our game is three things: you pay your rent on time, you respect the property, and respect the neighbors. If you can handle those three things, you're going to stay with us for a long time, because I'm probably going to forget that you live there. Um, so, but that's my philosophy. You asked me specifically, that's my philosophy. I know a lot of landlords that work strictly off of credit. Um, but not everybody has perfect credit. I don't totally believe in looking at the credit score. I look at the whole story. Why are you looking? Why are you moving? Have you ever been evicted? Now, in Massachusetts, that law just passed. Eviction records are sealed, so that's making that a little bit more difficult. Your references, what is your employer going to say? And anybody that's getting into this game, here's one important thing. And if you take anything from this today, this is probably the golden nugget right here. Well, we talk to their current landlord. We put very little weight in the current landlord. The key to the application is the prior landlord. The key to the problem is, and you might say, why? The current landlord could be trying to get rid of them, so they're going to give them a good reference. And you think, well, that's not great. I can tell you, Steve, early on in my career, we're going back way back. I had in my first rental property, I had a tenant I was trying to get rid of for non-payment and several other reasons, and she could never find a place. And um, we went to court, and believe it or not, I had a court order where I had to give her a good reference. So I never ever put weight in the current landlord.
Peter, another question about a potential tenant. What about income? Say, just for round numbers, the place would be going for $1,000 a month. How much money should that tenant be making to be able to live there comfortably, and something that would also give you comfort as the landlord?
A good question. And we work off of gross income and qualifying. So many times tenants will tell you, how much do you make? They work off a net. You want the gross number, but it's a really simple formula. It's three times the rent. So if the rent is 1,000 a month, I'm going to want to see that you gross 3,000 a month minimum.
Interesting. That is really crystal clear, and it makes good sense. Another big question is, if it all works out and you get the tenant in and they pay the rent on time and they respect the property and they respect the neighbors, when the 1 year point comes up, do you raise the rent or do you not raise the rent? And if you do raise it, Peter, how much?
That's another good question. So, like I said, if you do those three things, we might forget you live in our property. And I would say that uh, you don't want to raise the rent too high. So we may not raise the rent. Our leases are self-extending, and that's the dating period. Now, after a year of being a good tenant, we're married. We may every couple of years adjust. We don't automatically adjust, even though there's a lot of software that does. But there's two schools to that. So the answer to your question is if you do, it's not a significant amount of money. Maybe it's 25 bucks, maybe it's um, 2 or 3%. Never a significant number because A, there's a couple things to this. Number one, the devil is in the details. You already know what kind of tenant they are. If it goes up too high and they're going to move, then you have a vacancy. And it's not like you can, in most states, there's a rule. Massachusetts, if anybody's occupied it, for example, for 6 months or longer, you have to repaint the whole apartment or the whole house before you re-rent it. How does that happen? Instantly. So if they move out on the 31st, you've got that window of time. At best, you might rent to them mid-month on the 15th, but you've lost a month's rent. You've lost a month. You've lost the money of going in and painting it or having somebody else paint it. So, and the cost of redoing and repairs and showing it and looking for the tenant. If I got a tenant that's been with me for a year and has checked the boxes, pays on time, respects the property and respects the neighbors, I don't want to lose that tenant. I don't want to lose that tenant. And there's a value to that. So if the rent was 1,000 a month and I lose $2,000 in the cost of turning the apartment over or the house over, and say even 1 month's rent, 2,000 bucks divided by a year, 180 bucks a month or so that I've just lost. Is it worth that? In my mind, it's not, but I get it. If they're considerably below, I always like to maybe bump them a small amount, but you invested in the property based on that number. Now, granted, if it was their brother-in-law that owned it, they're only paying 300. Again, I don't crank them right to the thousand. I have a conversation, say this isn't going to be sustainable, but for some reason I bought the property knowing that my math was based on that, so I'm going to move them up gradually if they're a good tenant.
And another question, Peter, about one of the most common ways people begin investing in real estate. And that is you have a house, you're living there now, and you're going to buy your next place. But instead of just dumping all your equity from your current house into the next one, you save. And you save just like you did for your very first house. And that might allow you to keep the house you're in now and then move to another place and rent out the first one. Is that a good strategy?
I think it's a great strategy, and I'm starting to see it now as prices are escalating all over the board. I like to start to see first time buyers buy into a multifamily. It helps with the paying of the mortgage payment. In certain markets, the rents will pay most of the property for you. So as a first time home buyer, I think that's a fantastic way to go. But even if it's a small starter home, make that property and take the equity out of it or get a blanket loan to go buy the property you want, but keep that other property. That way there, that's one of the easiest ways to start in investing. And I'm starting to see it now, and I'm kind of excited again 40 years later, where I'm starting to see people buying and living in multifamily properties. It's certainly the way, in my opinion, it's a great way to go. We see it in the city with expensive properties, but in certain markets, I think it's a fantastic way to go. And then when it's time or you've saved some money, or you use that other income coming in to build or pay that down, then you've got a down payment and can go off to something else. I'm a firm believer in keeping and not selling unless you have a direct reason or goal for selling that property. So I think that's a fantastic way to really do it.
And Peter, you've mentioned multifamily many times, and just to make sure that everyone understands the benefits of that, say that you have a fourplex. You live in one, and tenants live in the other three. Or say that the whole thing is just tenants. If you lose a tenant, then you've only lost a quarter of your income, not all your income.
Oh, 100%. 100%. Were you listening on to our partner call this morning, Steve, by any
I
chance?
wish I was your partner.
Because you know we we had we have two vacancies right now in Florida in single families, and the conversation is that if I have a vacancy, we have a vacancy right now in one of our four families in the Berkshires, and my partner says same thing. Is the difference is we have three other incomes coming in those single families we have no income, and so that does make sense. I'm a firm believer in the multifamily over the single family based on what I'm seeing now.
And so, Peter, let me leave you with the biggest question of all. If I'm dreaming about becoming a real estate investor and having one property, two properties, or 25 properties, it's a lot of work. But is it worth it, and why?
Yeah, and I'm glad you said it is a lot of work because it is a lot of work. When we started out and bought our first two family in our business partnership almost 30 years ago, um, we used to do some of the, well, of course, we're 30 years younger too. So we used to do a lot of the work. It is a lot of work. You can't expect instant gratification. You got to start on Baltic Place and Monopoly. You don't start on Boardwalk or Park Place. Um, you're not going to own the country club based on your first property. It is work, and it might not be physical work. It might be mental work. It might be management work where you're managing, even if you have a property manager, you're still doing books, you're still doing tax returns. Is it worth it in the end? Yeah. But here's the thing. When is the end? That gets back to part about what are your goals? You're not going to make a huge cash flow off a duplex in a year. It takes time. We had a client and somebody that we've known for years in Western Mass, and he always said that it takes at least 10 years to start to see the benefits. Now, after we've owned buildings 10 to 15 years, they're paid off and now we're selling them or we're getting that cash flow. Is it worth it? Absolutely. I look at a guy I know in Florida. He's retired. He owns a plaza with about 8 units in it. I would say on average they're 1,500 a month. He owns it free and clear. I'm thinking 8 times 1,500. That's about 12,000 a month. That's not a bad pension check now, is it? So is it worth it? Absolutely. Is it easy? No, nothing worthwhile is easy. So it takes time. It takes tenacity. It takes knowledge. It's not like something that you're just going to get into and not have to deal with it. You have to deal with it. And part of when I sit and counsel with a client, that's what we talk about is what is your brain span? What is your span that you have time wise, brain wise, and money wise to get to where it becomes really worth it. But is it worth it? Absolutely, because every year you own that thing, you're writing the thing down, you're depreciating on your taxes, and it is one of the only things that you can successfully create wealth and retirement in estate building and have something for your kids where you're able to leverage. If I want to save and get 400,000 in a savings account, I have to figure in 10 years, say 300,000, that's 30 grand a year. That's what, 2,500 a month. Where am I coming up with 2,500 a month to keep loading in the bank account? This is the only avenue that'll allow me small money in or smaller money in and leverage that money to keep building this wealth. and have this, at the end of the day, really nice nest egg or estate.
Well, Peter, you know what they say. If you're going to get advice on something, get that advice from someone who does it and knows what they're talking about. And we certainly have had the right guy on the show today. And I really want to thank you for everything you've told us, the strategies, the techniques, and the tactics to not only investing, but investing the right way. Peter, thank you.
Thank you for the opportunity to share some time and knowledge and what we do.
You're very welcome, Peter. Peter West, Realtor with Bishop West Real Estate in Massachusetts, Vermont, New York, and Florida. Peter has been investing and helping his clients invest for more than 30 years.
You're listening to Real Estate This Week with Stephen Gasque.
And now, it's time for Beyond the Basics, in which we bring your real estate knowledge to the next level. And today, how to handle a vacancy if you own residential rental property. Now, if you own dozens and dozens of rental units, one vacancy might not be a big deal. But if you just own a couple or just one, a vacancy is a very big deal. So let's look at strategies on how to handle the money and how to get a new tenant quickly. Now, in a perfect world, one tenant would leave on the last day of the month, and the new tenant would move in the very next day. Now, that can happen, but it's pretty challenging, because typically in between tenants, you want to clean up the place, possibly repaint it, do any repairs it needs, that sort of thing. And that all takes time. But it can happen if you're super organized and super fast. But more often than not, you will experience a gap. One tenant will leave and the new tenant won't move in for a week, 2 weeks, or maybe a month. And that's why it's always wise to build up a reserve fund, enough money to cover several months of vacancies, so that even if you don't have a tenant paying rent, you can still pay the mortgage, the utilities, condo fees, or HOA fees. Now, what about filling that vacancy quickly? Well, the first step is great photos. Now, they could be photos of the unit when it's vacant, but there's a better way. If you ever have a tenant who really makes the place absolutely beautiful, kind of like an interior designer would, ask them if you can take photos of the place. You might not need their permission since you own it, but it's nice to ask. Take beautiful photos of the unit looking just like a magazine cover, and hold on to those photos. And when you do have a vacancy, use those photos instead of the empty unit photos. They will give potential renters a better idea of how beautiful that place can be. And that's huge. Another issue, how do you handle it when one potential renter says, "I'd like to come right now and see it"? Another says, "I'd like to come after work tonight and see it." And the next one says, "I'd like to see it this coming weekend." Now that can drive you crazy. But again, there's a better way. Treat your rental like a home for sale and schedule viewings just like an open house. For instance, in your rental listing, tell people the property will be open Saturday from 1 o'clock to 4 o'clock, and the line starts at 1. So, at 1 o'clock, you greet the first people in line, and they get to see the place first. If they want it, ask them to fill out an application. And while they're working on that, show the place to the second people in line. Chances are, by the end of the day, that unit will be rented, ready to go, and hopefully you'll have the shortest possible vacancy. But let me leave you with one more idea: a multi-year lease. If you believe you found a great tenant, why just go 1 year? Why not 2 years or 3? Now you can build in the appropriate rental increases or have no rental increases at all. It's your choice. But a multi-year lease would mean fewer vacancies and peace of mind going forward. Just a few ideas about how to handle a vacancy, and I hope they might help you. Next time on Real Estate This Week, how to buy a house at the beach. Wouldn't that be amazing? We'll talk to oceanfront real estate experts about why late summer and early fall is the best time to go for it. That's next on Real Estate This Week. And until then, I'm Stephen Gasque, and thank you for listening.
A brand new episode of Real Estate This Week with Stephen Gasque drops every Thursday, everywhere. And you're invited to listen, subscribe, and follow us. Just look for Real Estate This Week with Stephen Gasque. The best real estate strategies out there, just for you.